Hello, everyone. Thank you so much for joining us for another weekly wrap up. My name is Jeremy Cronemeyer, and I also have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call. Kind of mixed bag, mixed performance here. We saw the S&P index rise slightly, where the Russell 2000 small cap index was flat. What was down? The Nasdaq technology. That was off about 1%. Nvidia, one of the largest tech stocks, definitely one of the most widely followed. That was off about 8%, putting pressure on that index after it reported strong Q2 revenue, but maybe not enough, since that bar, that hurdle, is set pretty high for that particular name, if not for that whole sector. But overall, we saw financials gain about 3%, while technology gave up about 1.6%. Crude oil, or commodity, that spiked above 77 per barrel, but ended the week down about 1.8. And gold futures remained near all-time highs. Now, we did see the Treasury yields rise modestly after Q2 GDP numbers were revised to about 3%. If we go over to inflation, the core PCE number came out, and that rose about 2.6% year over year. That was up about 0.2 month over month. And we still saw reasonably strong consumer confidence, which was near about a 6-month high. Now, looking at U.S. housing, those prices deteriorated a bit, slightly on pending home sales, falling about 8.5% year over year. Going overseas in the Eurozone, we're looking at inflation fell to about a 3-year low at about 2.2% year over year, raising expectations for the ECB to start their rate cuts. Now, over in Germany, we saw a lower CPI, and in Japan, the Tokyo's core inflation, that rose about 2.4% year over year, supporting possibly some further rate hikes by the Bank of Japan. Now, this week, I think a week all about labor numbers. That's going to be coming out. Non-farm payrolls are going to be coming out Friday. So I think everyone's a bated breath until that comes out and sets the tone, or could set the tone on how quick, how fast, how much the FMOC, the Federal Open Market Committee, lowers rates, which is expected to happen in September. So other economic indicators will be looking at the ISM PMI survey. If we go internationally, a pretty light agenda over there. We'll see some things coming out of Bank of Canada, if they're going to be cutting rates 25 basis points, and some economic data coming out of China.
Gotcha. Well, appreciate it, Graham. And did you, going in the short run, do you see the volatility continuing here?
Yeah, I definitely do. And I think last week we brought up, what's called the S&P oscillator. It's a short-term indicator of the market. Now, again, it's short-term. It's no flag that's waved to know exactly when to get in and out. So I discourage anyone using that for a timing mechanism, but gives us an idea if the market's overpriced or if the market's oversold. And right now, we're still in pretty heavy-duty overvalued areas for the S&P. Now, what is overvalued in the S&P? Well, what's been coming off? Tech's been coming off. What's been rallying? The more boring dividend payers, the more economic sensitive areas that would love to see interest rates coming down, like real estate, utilities, staples. That's really been dramatically outperforming with financials, insurers, so on and so forth. So where the market takes away, it also gives us. So I would expect some volatility here coming into the election. I think the average pullback during the September timeframe is around 4%. I think in 22, 23, don't quote me 100% on these numbers. If we look at September, October, you saw somewhere between maybe 8% and 13% pullback over the last couple of years. But again, then we'll be getting into the time of the year that's very good for the market, and that's November plus going into the first of the year, which is usually very positive. So again, what we might give up, we can look to rally back as we approach the end of the year.
Gotcha. We always appreciate the expertise, Graham, and we hope everyone had a nice Labor Day holiday on this shortened week here. And we look forward to seeing you guys next week. Thank you so much.
Take care.